Hello traders, how are you? Vladimir here from Traders Academy Club, and in this video I want to show you how to apply the very simple basic principle of price action in a range breakout strategy. To do so, I will take the pound franc as an example, and I will refer to the trading report from Traders Academy Club. But before I do that, if you are new to the channel, then first of all, welcome to our fantastic community, and I would like to invite you to subscribe to this channel. Just please follow the subscribe button below this video, and remember to enable the notifications so you know when there is a new content available for you. As well, I would like to invite you to join our trading club, the Traders Academy Club. You can also follow us on a free Telegram channel for the community. Both links could be found below this video in the description or in the pinned comment in the comment section. So I refer to the trading report. This trading report is directly from Traders Academy Club, and I will go to the watch list and we will talk about the pound franc. So once I apply my analysis, and I want quickly to explain the logic that stands behind it, I found a 3 waves triple cycle here with a bullish divergence verified on the lower time frame. We got a beautiful sign here on the MACD divergence, on the RSI divergence, and the very important thing is we got a false breakout, false low here, and on the previous important significant low. Since this is on the view of weekly, that means that there is a big chance the market is trying to build up a corrective cycle. Since this is a weekly time frame, that means such correction could be long journey, okay, and could take a while. So the big picture here is bullish. So we go to lower time frames, and here is what we got. So the first push up into clear wave, then we faced a false break here, attempt to create a low, another false breakout, retested this same high, and another false breakout on the low. So it creates a bigger range for us, yeah, of course we can go expanded range here, no problem, but the idea here is we are in a wider range of consolidation. And then on the smaller scale, which basically happened on this very situation, we were rallying upside again in two first pushes, then small pullback, and it was moving in a clear consolidation. Now, at the moment of the breakout, right here, after the long consolidation, we find ourselves in a situation where we want to make a decision. Okay, so is it logical breakout, or there is a big chance it will be fake? Now, of course, in advance, we never can know how the market would choose to behave. But what I want to show you is the technique that I use in general in spotting my opportunities, but which is also very, very relevant for the ranges breakout. And this is the moment where the lower time frame, the third lower time frame, verified the break of the third high. So what happens here is we recreate 3 higher highs, higher lows pattern. Why it is important? 3 higher highs and higher lows happen in bullish momentum, in bullish market. That's how bulls show us their control, when they do manage to create higher highs and higher lows. Add to that the fact that the weekly longer term analysis and daily range breakout all happen simultaneously in the same time, then what do we get is a great chance of a good ongoing momentum to the upside. Now again, I don't know at that very moment what will happen. The market might go and retest the broken area before the continuation, right? Or the market might decide it's even fake and then fail. We can't predict, and this is not any sort of holy grail solution that will always work for you. No, but in a fully synchronized analysis, this entry technique gives you very high probability to end up with a winner, or at least not with a loss. Okay, if you will have to intervene and manage your positions. And this is the very important thing, because in the business of trading, what we are dealing with is statistics, and in other words, probabilities. What we need is these very higher probabilities to start with, right? We can't predict how the market will actually move. But when we do start a position with a clear advantage in our favor, right, when everything is synchronized in the same direction, the break of the range happened, and we gain the momentum by making the higher highs, higher lows, that's the sign I know, voila, my chances are indeed higher. And then I can start building my trading plan up to where will I go. So there is a not closed area right here, right? Very strong zone. There is a swing high there, right? I can start applying the indicators there for those who are using the RSI or the MACD with the bullish divergence after this drop, or gaining momentum here. Whatever the strategy you love to apply here with the indicators can fit. But it all starts with analyzing the situation on the price first of all. So at the moment this validates, this is a green light for the buyers to go and take the control. Now I also want to show how do I invalidate such a situation, and in that case this is ongoing trend. So at the moment we got the breakout. What I don't want to see is an instant move through all the Fibonacci's. In trending structures, if the trend is real, we are building the waves in three higher highs. It could be more, of course, to the higher lows to the same direction. Then correction could be ABCD, could be range, could be one wave, but we don't want to see one straight move through all the Fibonacci's. That's how I invalidate my bullish view if the market decides that my analysis is wrong. Okay? But if the analysis is right and there is a momentum, you will get yourself a chance to enjoy significant rallies pretty quick, because again, when all get synchronized together at the same time, that's normally where your chances are higher, and the probabilities you end up as a winner would be higher as well. So let me know, what do you think about this technique? Do you have any different techniques that you apply with ranges breakout? Share with me your view in the comment section below. And also I would like to ask your support back. As you know, the YouTube algorithm works in a way of comments and likes. So if you find this video and generally such educational videos helpful and useful, please hit the like button below this video, and if you can drop some feedback in the comment section, and your help is very much appreciated as always. Feel free to share this video with anyone who you want. This is free for the community, and I hope the message I have in such educational videos helps you to perform better when you deal with your trading. So that's basically all, and I would like to invite you to our Traders Academy Club. The links could be found below. That's where you will enjoy from all this list that we update on daily basis, and you enjoy from the live market analysis, live meetings, and the full detailed trading report, as you can see here. So I hope to see you there with us. And as I said, the link could be found below in the comment section, in the pinned comment, or inside the description. That will be all for today. Thank you very much for your time watching this video. I wish you all the best and good luck in trading. Stay safe, be well. I'll see you soon with other content.